Hi, and welcome to importing our monthly budgeted income statement, allowing us to use our capability to establish our future cash flows and our future balance sheet. What we have in front of us is bare bones as such of our income statement, just giving us our revenue, our cost of goods sold, and our operating expense environment. And in this case, we have really established our difference between our variable costs and our fixed costs with each of the key components of those items. And these are the elements that we wish to bring into our system. Now, getting back into and what we have in front of us is a model with our historical actual data. And obviously, the first step we need to do is to create our future budgeted periods. Now, in this case, all I'm going to do is I'm going to go to 1 month, right? And I'm going to hit budget, press OK. And that's going to give me a blank column. And I'm going to do that for the next 12 periods. So that will allow me to have my blank columns open in a budgeted format for my next 12. Now we have our blank data or period data ready for the ability for us to import. Well, in order to import that, we simply go to Import Excel and we select our Excel file that we wish to import, and I'll find that over here simply by doing this, and we press OK. And this will bring us into our import capability. Now, what we have here are some columns that we don't really need. So I'll click onto the column and I'll press hide column. I don't need this. This is my actual data there. I don't want to bring that in. And I don't want to bring this actual data in. So now all I'm left with are my consecutive columns that I need to bring my data in. And the first element that I have is my revenue. And I want to bring in my total revenue budgeted that I have already prepared. I'm going to select all those revenue items, right click, and I'm going to press copy. And in this case, I'm going to just put it into my first budgeted empty column, and I'm going to right click and press paste. And that allows me to automatically bring in all the data that I wish for that whole 12-month period. I then go to my next section, and I have my cost of goods sold. Now, also what I can do is I can right click on the column I wish to freeze, so that will freeze that column there to make my life a little easier. And in this case, all I want is cost of goods sold. Now, here's the problem. Cost of goods sold here has been shown as a negative item. When we look at our system, we want that as a positive item. So all I do is I select that data, right click, but in this case, I'm going to copy reverse sign. And I'm going to bring it into my cost of goods sold there and press paste. And automatically that will show it as a positive value in each of my cost of goods sold fields. Next section, I then go to operating expenses. Now, in my operating expenses, remember we had a variety of different operating expenses, and we want to actually show these line items in our detailed window over here. Now, in order to do that, we want to copy these items and place them on the other side. But in order to copy them, I have to unfreeze my column. So now I can use this capability to copy. So what I want to do is I want to copy all of these items over here. I'll just copy those and I'm going to place them over there. Okay, nice and easy. There it is. And then basically go and refreeze my column. And now I'm in a place where I can copy these items relatively easily. Now, I want to have these variable costs kept together. So I'm going to select all those items there, and I'm going to right click and copy. I don't need a reverse sign. I want to have a positive value and bring it into my top left-hand corner of the first line item that I wish to paste in. And there is the relative data that I'm requiring. And once again, I'm going to do the same thing for my people cost, premises cost, administrative cost, etc. and making sure that I am starting at the right place here. Um, and there is the cost elements over there, copy, and we're going to paste them into the first cell, and there they all are, nice and cleanly done. So this is my way of getting my data in that I'm looking for. And oh yes, I have forgotten my depreciation, so let me quickly go and do depreciation as well. There's the depreciation. I copy that and I place that into my depreciation side. And in this case, now I have my variable costs, my people costs, and my depreciation. However, the system doesn't yet know that these are variables and these are fixed, and that's depreciation. So for each line item, I have to classify them in the relevant right category. So in this case, that's a variable operating expense, and it will remember that it is also a variable operating expense, and this is a variable operating expense as well. In this case, my people costs are fixed, so I'm going to make that a fixed cost. My premises cost is fixed, and my administrative cost is fixed, right? And depreciation is depreciation. So let's do that there, and we should be good. All right, so we've classified our key line items, and we are in a position to move to the next section if there are any next sections. Now, we haven't calculated our interest expense, and that's fine. And we haven't calculated our taxes. We haven't done any of these other things. We haven't done we haven't established what our bank account is going to look like, or any of those areas. So at the moment, that's pretty much all we can bring into our system. At this point, we press the exit button, and there we have our pretty much our income statement prepared for us on a monthly basis. Now, as you can see, our balance sheet has not been prepared. So there is no balance sheet available to us yet. So now in order to fix this problem, we go to each individual period and select scorecard. And this allows us now to use the data that we've already established and build our balance sheet. Okay, so the first thing I want to do is I want to go to my working capital, and I'm going to estimate my receivable days. I'm going to keep that at 50 days, and I'm going to keep this slowly get this down a little bit and keep this at 90 days. So as you can see, while you're entering in those assumptions, you're starting to build your balance sheet. All right, so it's all nice and clean there. Then there's a couple of small things that we have to sort of keep in mind. Areas such as, what is our cash at bank, what is our fixed assets, and we can quickly use our historical data to help us there. I'll keep my fixed assets at 1,050,000 for the moment, and so I'll just enter that right into my scorecard. Okay, and I don't have any investments, and my other current assets at the moment, I'm going to keep them consistent. Other current liabilities, once again, I'll put them as consistent per my historicals. And let me see. Okay, let me just press update. So now I'm slowly starting to build my balance sheet. As you can see, there's the balance sheet progressively being built, but I need a little more information. Right, I need to know what my long-term debt is. So I'll go back to my scorecard, and I start putting in my long-term debt. I anticipate no debt repayments. In fact, only the next month I have a debt repayment, so I'm going to bring that in then. And I have my share capital as stock at $20,000. So far, I think I'm going good, and we're going to have a little bit more work to be done. Our average cost of debt, we're going to keep it about 8%. And we're going to make a provisional tax assessment, even though this is a privately held company, and yes, the owner gets attributed to the total tax component there, but this just gives us an idea of what the provision for tax would look like. All right, so once I've done that, I press OK and then get a quick feel for what my balance sheet looks like, and it looks fairly clean. My short-term debt is still $298,000, and Yeah, for this month, I'd like to at least see some cash at the in my bank, so I want to bring that in as well. So scorecard, back to scorecard, and we can do our tweeting over here. So let's say we would like to see at least $50,000 cash in bank. Now, if that's the case, of course, our short-term debt gets changed quite substantially. And so if we want to have $50,000 in the bank, that's the sort of debt environment that we need based on the fact that we haven't repaid any long-term debt for this period. So that seems reasonably clean. And do a quick check on my working capital. That looks okay. Yes, it still stays fine. And I am feeling a little more comfortable with my my situation. All right. Um, I'm still showing a difference here of $108,000. So I need to fix that. Let me just see how I can do that. And in this case, all I would do is I would go to February and then click onto my scorecard in February. And this is where we use the quick fix. We just double click on our short-term debt and click onto the next line item, and that automatically balances our balance sheet. So in this case, we're looking at about $239,000 of short-term debt. We maybe want to increase our cash on hand to $70,000 because we know we can sort of max out at about $300,000 there. And also in the February month, we have a long-term debt um, repayment, and the repayment for that period of time is going to be about $50,000. So I'm going to bring this down to $750,000. Right. So that shows you how you can actually reduce your long-term debt. And in that case, we need to have a facility of about $300,000. So that looks relatively clean. And then once again, I press update. And then automatically, I've now got my balanced balance sheet for the month of February. And I'll continue this process until such stage as I feel comfortable with my budgeted balance sheet and my budgeted cash flow. It's all established there, etc. So this is pretty much correct. And then I continue the process. Now, performing this function really helps you to uh, get a good feel for what's happening in your business. So let's say, for example, at this point, let's call it in the month of July, I've got another long-term payment that I have to make. In this case, it's another $50,000. So I'm going to bring that down to $700,000. What we notice is now our short-term debt, right, which is that balancing figure, our short-term debt is now sitting at about $104,000 negative. Now, obviously, we don't want to see a negative value in our short-term debt. So the way we fix that is we simply go to cash on hand, and if we know this is 104, that should be roughly about $170,000. So let's bring that in. That brings our short-term debt to about $4,000 negative. I can actually, if I want to, I can fix that to let's call that $175,000, and that gives us a little bit of short-term debt. So at this point in time, what we notice is we have repaid our short-term debt, and we've settled our long-term debt commitments as well, and we would then have $175,000 of cash in the bank. So that gives us a good feel for where our picture would look like at the end of June. So once I've done that, I can press OK. We now have a balanced balance sheet for June. And then of course I continue this tweeting process until such stage as I've completed my budgeted capability. All right, so remember we click on to our short-term debt. Once again, notice that we've got surplus cash. Let's call this 250, actually $300,000. And there you are. We're quite happy with that, and we continue the process. Now, in the month of September, we slowly want to start seeing some working capital improvements. So now we're at about 47 days, and we want to bring that down to maybe, let's call it 40. So we want to bring that down. Our inventories, we want to start seeing this going to about one more at the 150 mark, and we want to bring this down to 70 days. Now, automatically, you notice that these numbers have changed because of the way that our data flows. So always keep your eye on this and make the necessary changes that you need to ensure that you're looking at the right type of structure within your balance sheet. And once again, as you can see, it's all nicely balanced for us. And we continue the process. And this time I'm still focusing on my working capital. I want to get this down to 130 days. That's fine. I update that and I should be good. And we continue the process. Now, we have completed reviewing every single period. We seem to be reasonably happy within each period of our scorecard. We like what we see. Well, pretty much that's a relatively easy way to get to a budgeted income statement, cash flow statement, and really be able to tweak each individual period as you require. So hopefully that helps. All the best from Andre.